Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday hosted by the Cal State Bakersfield Small Business Development Center, proud member of the Central California region of Small Business Development Centers. And you're here for webinar number 325, number 3 1/4. We're going to have a little Borel fire update. We're going to be talking about the SBA line of credit and much more. So let's get started. Here we are, August the 28th. And what's up today? August 28th, 2024. Well, we're going to have an update that we're going to hopefully have more of these to come, an update on the potential relief efforts. And I say potential. There are relief efforts going on, but hopefully those are going to be enhanced and providing much greater relief as part of the aftermath of the Borel fire, a fire in Kern County in the Kern River Valley, consumed over 60,000 acres, large amount of land, including a large amount of structures. I believe the structure total was close to 250, and also a lot of other negative effects that went along with a large wildfire going through your community. So we will talk about some of the things going on right now and things that are developing as of today. So, and taking that big look, we're going to be looking at what might come ahead, what may come. So we'll see about that. But we're here also to talk about the SBA pilot line of credit program that was recently unveiled by SBA. So SBA has a new program, a line of credit. They've had lines of credit programs before. We'll discuss why this one looks so much more promising than potentially some of the ones in the past. And we'll also look at why a line of credit could be needed and how it might benefit you. You know, when we talk about lines of credit, we're talking about two very different types of funding. One of them is a term loan where you get an amount that is all given to you at once, and then you get a line of credit that you use when you need it and then pay it back. So there are basically differences between the two. We'll talk about the lines of credit and the Capital Quarter today, our usual feature here on Webinar Wednesday. We'll discuss exactly those options that are available to you. Our Economic Corner will return for webinar number 326. A lot going on in the economic segment and the economic sector. So lots going on and a lot how it's affecting small business. Some great surveys out that we want to take a look at, but kind of preempting the Economic Corner today. We have tools and resources that we think will help you thrive, help your small business reach its maximum potential. Your questions today will be answered, so please go to our Q&A, go to the Q&A section and put your questions in there, and we will answer those after the presentation today. Also, if you have anything else to add, Maureen will be working the chat box. Our webinar producer, Maureen Busher-Dane, will be working the back end of the chat box to keep you informed of things that we are talking about at this time. So those will be in the chat box. And we do have a poll today. So going to the first of what are going to be 3 questions. Sorry, I don't have a fun, whimsical one today, but maybe next time. So let's just get to the seriousness of this program today, and let's launch the first poll. And the first poll is going to be, I am here today. Why are you attending today? Are you attending because you want a Borel fire update? And this is multiple choice. You can actually click on more than one topic. So the Borel fire updates. Are you here for the new SBA line of credit information? Are you here for that critical information that could be affecting your business that you need to know about? Or, you know, do you want to hang out with the cool kids? Who I define the cool kids as our audience. So hanging out with a rather significant size audience today. The updates on the fire, the SBA line of credit, critical information and news for your business, or the cool kids. Okay, we are going to end this particular poll. We do have 78% of you that are participating. What a nice large sample size. Thank you so much for participating. We'll end the poll and share the first results for you today. And 85% are here for the new SBA line of credit. 19% for the borelfire update. 30% of you want critical information on your business, and 22% are here to hang out. So thank you all so much. Again, the 80-20 rule kicks into effect. So we will stop sharing poll number 1 and actually go back to poll number 2. And we'll try one more time with poll question number 2. And launching that is, if I had funding, how much do I need? Do you need 25,000 or less, 20 to 100,000, 100 to million, or over $1 million? Boy, there's a lot of work to get to that poll question. For some reason, didn't want to launch. But now we have it. And if you had funding, if you had the amount of funding that you would hopefully need or desire, would that be 25,000 or less, 25 to 100,000, 100 to $1 million, or over $1 million? So we are up to, again, around 76%. So let's give you one last second to jump in, and we'll end this poll and we'll share the results with you. And we see that 62% of you are looking for $25,000 to $100,000, 19% $100,000 to $1 million, 25,000 or less 15% of you, and 4% over $1 million. So there you go. Thank you so much for participating. It is good to know this credit line program we're talking about today will go up to $5 million. So good to know for future reference. So we will stop sharing that particular poll and go back to our third and final poll question. And it is essentially, what is your biggest business problem right now? Very serious set of polls today. Is it inflation? Is it workforce issues, rather hiring or quality of workforce? Is it government regulation? Is it cash flow, or is it accessing capital to start or grow your business? Again, your biggest business problem right now. Is it inflation or workforce issues or regulation, cash flow, or accessing capital to start or grow your business? Okay, we do have 71% that have participated. We'll give you one last minute to get in. It probably won't be a full minute, more like a moment, but now up to 82%. Boy, just continue to jump right on in. And only one choice here: your biggest problem, your single biggest problem: inflation, workforce, regulation, cash flow, or capital. And with that, we are going to end the poll and share these results with you, whereas 41% of you are looking to access capital. There's some great programs coming up and great programs that are out there now to try to help everybody access capital, of which we'll talk about one today. 28% is cash flow, 17% inflation is bothering you, 10% workforce issues, and 3%, only 3%, government regulation. So thank you so much, and let's move on. Okay, so on with today. When we get into this post-fire Borel, I wanted to just make you aware of an event that's coming up that is going to be hosted by a lot of organizations in the Kern River Valley, a lot of regulatory agencies, such as USDA and US Forest Service. It's going to be sponsored BLM, the Bureau of Land Management, and also by the UC Cooperative Extension. And you see a program coming up on September 12th. Sorry, I won't be able to attend that day, but they have a good program for those that are maybe affected in the ranching sector. Maybe you had a small farm, maybe you had some rangeland that burned, maybe some outbuildings. A lot of good information, including, one of my favorite groups, the Fire Safe Council, will be there. So looking at the program, good program. Right now, they're going to start with the fire severity and damage assessment. And damage assessment is kind of the theme of the day today, because we'll be talking about the damage assessment going on, not by the U.S. Forest Service and BLM and the USDA and the United States Department of Agriculture, but also other agencies. And then you'll jump into some of the recovery from the fire and woodland and fire areas and some of the post-fire. That is coming up on September the 12th and will be at the Kern River Valley Senior Center on 6401 Lake Isabella and Lake Isabella. So please, if that interests you and you see great benefit there, please do attend that. So some of the other community resources that we shared 2 weeks ago, and looking for anybody that has more resources that are going on, any fundraisers that are happening, to please pop those in the chat for today. And, we will see that AltaOne Credit Union has an emergency member assistant program, and it provides aid to members living in Havilah, Bodfish, and Lake Isabella. Surrounding areas might work as well. They have bridge loans that you can apply for up to $5,000 at reduced rates with no payments for 3 months. And they can be used for uses of these funds can be used for temporary housing or repairs, insurance deductibles, and other urgent needs to get you through this difficult period. The loan assistance is available to existing AltaOne loans. They have that also. So if you have a current loan with AltaOne, they are making it easy to streamline the process for deferment and potentially providing late fee assistance also in those areas. You can use that 800 number right there, or you can contact a local branch nearby for AltaOne Credit Union, headquartered just on the other side of the hill there in Ridgecrest. So one thing that really kind of prompted the urgency of today's webinar was just to kind of bring into focus for those that are in the Kern River Valley and affected of what's going on. And we had just talked a little bit about the USDA damage assessment. Well, starting today is a joint FEMA, State of California, and SBA damage assessment, and this is underway. And this will be a virtual preliminary damage assessment, and it will be assessing for homes, businesses damaged as a result of the Borel and, interesting enough, the Park wildfire. So we're getting a little bigger here. There was 2 major fires burning at one time in California. And as we've seen with some other disasters, sometimes those can be combined into an assessment and potentially a disaster declaration for both regions. So right now, an assessment is being conducted virtually on photos, informations, and facts. And those have been obtained by the local sources, either from the local counties where the disasters have occurred, and also likely from the Cal OES, the Office of Emergency Services. The good thing is that this is a quick process, and then after that is kind of done, without trying to get too deep in the forest here, as far as this process, this damage assessment process, but it is underway. FEMA representatives will work with a variety of others to do this. In this one, it is again FEMA, California, SBA, and it is kind of, to conduct this in accordance at the conclusion of this assessment. The validated and agreed upon information will be returned to the requesting organization. The requesting organization in this would be the state of California, which requests that the federal government come in to assess if a disaster declaration is warranted. So with that, it will go to the governor, the governor of the state of California, and they may submit a request for a major declaration utilizing the information that is being collected at this moment. So, we've had multiple county disasters, and so basically, what do they look like? And when they're being assessed. So this assessment will be for homes and businesses damaged in Butte, Kern, and Tehama counties. The last time I saw that horrific park fire, it was around 450,000 acres, burned in a lot of wildlands, but also burned a lot of structures and homes and impacted businesses. In Kern, we've seen a lot of damage to structures, a lot of residences, And really, the numbers that I'm hearing are very, 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 very few of those residents had insurance. And that is that entirely other crisis, the insurance crisis in California, that is affecting rural homeowners, rural business owners, and pretty much now spreading to a lot of other areas in insurance needs. So that assessment again will be for homes and businesses in Butte, Kern, and Tehama. And then and that's again an if the damage is significant, it can produce that declaration. So what have other ones look like, and what are some of the past declarations, multiple county? Well, many of you remember last year, early in, say, March of 2023, and even going back into December of 22 and January, we had a lot of real significant weather issues, and some of the weather disasters was everything from a thing called straight edge wind to massive amounts of snow in the Eastern Sierra, to flooding, and a lot of other damage from rain and hail. So it can look pretty much like that over multiple counties. So, and then of course, and that one was a lot of that was the property damage that was done by that weather-related disaster. So we're looking at property damage in this case, property damage that was affected on homes, on rented houses, and others, and also businesses that were impacted with their business. Now, in COVID-19, we had a disaster in March of 2020, and this disaster was in basically all 50 states, and it was different. It was in all US counties, and it was an economic injury disaster that was a separate declaration by the US Small Business Administration, or SBA. And so that one affected the businesses were economically injured. Now, from these fires, you very well are going to find businesses that have been impacted. Businesses that are significantly impacted can go again through that, what we call the EIDL, the Economic Injury Disaster Loan process. And so that's how these two disasters look significantly different. Although you could have also had an economic injury disaster related to the weather-related disaster in 2023. So that's a little bit about how those disasters could look. Again, here's a little bit on the disaster process. And, I think that it at least sparks some optimism that if those two disasters are looked at together, and, that looks like it could be a more significant declaration if a declaration happens. But it's all going to come down to the assessment of damage that leads to that is being conducted now. So again, it could affect homeowners, renters, businesses of all sizes for the physical disaster loans that are physically disastered or damaged by that disaster. And also small businesses, small cooperatives, and most private nonprofits of any size can apply for economic injury disaster loans. And again, the economic injury disaster loans, like the physical disaster loans, are very favorable terms given today's economic conditions. Those are long-term recovery loans of 30 years, very long-term, at 3.75% interest. So that's a little bit more on the process. Our role at the SBDC, we've been involved with several different disasters, and we can help with your SBA disaster loan application. One thing that I really like to say with every disaster is that we can evaluate opportunities created by the disaster. One of them that we don't talk about enough is a lot of times if there is disaster, and again, this has not been created, a disaster has not been declared, there is no one to call at this moment for disaster relief. It is being assessed, and if that particularly happens, it happens, and we will have much more information on the process. But, one thing I really like to get people to do is evaluate the opportunities and evaluate also opportunities for their particular business. And one of those could be actually the resilience of your business and also using disaster funding to prevent these type of activities in the future. And also that would also include potentially an emergency response plan, emergency disaster plan for future disasters, and then also really looking at that cash flow aspect and that cash flow element to diversify any sales streams and sales recoveries and make a business profitable. So that is what we have so far on the Borel fire. We plan on being back in 2 weeks. Next week is short week. Everybody's got Labor Day, right? So we'll be back in 2 weeks, and hopefully we will have much more updated information by then. And we will have potentially some more programs that could actually work toward getting some relief. So if I'm a business owner right now or a homeowner right now, and I live in the KRV and I've been impacted by this fire, what I am doing is I'm first looking to see if I have any recourse through insurance. You know, disaster programs are wonderful in that they can bring some much relief at some great terms. However, they are not a universal insurance program or universal insurance policy for the loss that you have suffered. And you're not going to be made whole. You're going to have to incur more debt in order to get the relief that you need through SBA programs. Now, if somehow it is declared a FEMA disaster, that comes with new resources and new programs and new assistance that are beyond that and even into the grants. But I don't want to get too far ahead of ourselves right now. But if I'm in the KRV, I'm looking at if I can file an insurance claim, and then I'm looking at what my loss is and determining what my loss is in case these actually come to fruition. Okay. So let's talk about this new SBA pilot line of credit program. Very excited about this particular program. I think it's a great step. I've always said that we always need more and better line of credit programs to assist businesses that don't need term rate funding, that don't need permanent working capital. Maybe they need temporary working capital. And, you know, we throw around this term permanent working capital associated with term loans all the time. And that's getting that loan and basically using it as a base to expand that particular business and creating that cushion in your business that operates on a routine basis. So you might have sales every day. You might have cash coming in every day in a business that requires permanent working capital. With a line of credit, maybe you have different terms. And maybe you have different conditions in what you operate. And we'll look at some of those in just a few minutes. So we really are going to look at this line of credit program, which is a pilot program, meaning it is on a trial basis to see how it goes. Our SBDC advisors are working with lenders that are starting to adopt this program. It's all happening right now. And we think it's a great program, and we're out there to assist clients with not only this opportunity, but some of the dozens of other opportunities that exist. And you can go to our YouTube channel and find out some of those. So what is the new SBA line of credit pilot program? Well, it's part of the SBA's Bellwether program, their 7A loan program. And if you've ever wondered what the heck does 7A mean, it is merely just the statute in the Small Business Act that created the loan program back in the 1950s. So my understanding, 7A is the designation there, the title stuck, and so it is better identified as a guarantee program because the SBA will not be making personal line of credits and also personal or business loans for that matter. So a business loan is not going to be made directly by the SBA. So how the guarantee program works, which is essentially what the 7A program is you'll find a lender to make the loan, and then also they will apply under favorable terms to the SBA to receive a guarantee that they will be paid back. And that provides them the incentive to work on that particular program. So let's jump into, I'll try to keep the acronyms here to a minimum, although it's kind of hard with all this stuff going on. Line of credit, LOC. We see WCP, which is working capital pilot. And so again, a working capital pilot is that money that isn't for fixed assets. It's for the operating structure of your business that could be variable. It could be increasing substantially. It could be seasonal. It could be you have times when you have frequent disasters, for crying out loud. You know, that's also a possibility. So let's get into the working capital pilot. And let's look at some of the benefits for the lenders first. And I like to do this because there have been past programs. I remember one, I believe it was called a Green Line program or Green something. And when I tried to work with lenders on that particular programs, they said it didn't work for them. So for us to have a successful pilot program that comes out of SBA as far as a lending program, SBA listens long and hard to the lenders. And essentially, what are lenders looking for? Well, they're looking for a fee structure, that kind of a guarantee fee structure that works well with them. So they want the conditions with the fee and the structure of that to be a little bit more flexible. And flexibility is what they're looking for. So they are provided a guarantee up to 75%, up to $5 million. Smaller loans, so if you have a smaller loan, I believe it's up to 85%. So there's an incentive for lenders to provide smaller lines of credit rather than going up into the millions of dollars, of which they would only receive 75% of the guarantees should something happen to the repayment of that particular loan. And lenders are able to use it to issue revolving lines of credit. So not only do you get a line of credit, but when you use those funds and you pay them back, then you can actually continue to use that. And with that flexibility to structure both asset and what we call transaction-based loans or facilities. So there's a couple of different ways we can go there. We have kind of asset-based and transaction-based. We'll learn what those are. You know, the other thing is for it to work for a lender is it's got to be flexible, I mentioned, but it's got to be flexible in the way that they can charge interest rates, in what they can do to do the paperwork, to what they call perfect the guarantee. So there's a process that they have to go through in order to keep that guarantee, which provides them the incentive to make these loans and provides the incentive to then provide capital and access to capital for a lot of our small businesses. So that's why lenders want to do it. They are looking for some of the benefits to, number one, make it not too burdensome to where it makes it easy for their staff to do and to perfect a guarantee, and to make it a program that they see as a great need in the community. And if they see the same community I see, there's a pretty significant need out there. So what are the benefits for small businesses? Well, it provides access to that working capital, that money that you use every day to pay your employees, to buy supplies, to pay variable costs, to pay fixed cost, critical for a growing small business. Really, when businesses grow, those increase. Your inventories must go up. Your accounts payable, the amount that you pay employees on a regular basis, is usually go up for growing small businesses. So the nature of the line of credit is to provide an efficient means to manage that cash flow and interest expense. With a permanent loan, if you have a growing business, you might borrow, say, $150,000, and you get that $150,000 right then, and then interest starts accruing from that particular day. But what happens if you don't need the entire $150,000 right now? Maybe you need $75,000 of it now and $75,000 of it in 4 months. Then you're just paying $75,000 on money that you don't really need. And to try to do that in two different loans, two different permanent loans, is really not efficient at all, because it's difficult to get two $75,000 loans compared to $150,000 loan. So it really helps the business to manage that cash flow and interest expense efficiently. So we've already mentioned asset-based lending and transaction-based lending. So, you know, where you see asset-based lending mostly is in businesses such as manufacturers. And those are involving, you know, your accounts receivable or your increase. And so with that is, it can be maybe as a smaller manufacturer, you need to ramp up manufacturing. Potentially, maybe it's a seasonal product. It could be something like outdoor furniture, which really doesn't sell too well in Chicago in January and other parts of the US, for example. But It could be something like that, or you have a supply that is used by the agricultural business and the agricultural community, which for much of the San Joaquin Valley, if you're in crop production, is dormant. So, you know, for manufacturers, you could be using this asset-based lending. So to increase and to use as your accounts receivable goes up. So the amount of money that's being repaid to you as sales occur. So you make the sale and you make it on terms, and you're a growing business and it's going up and you're needing to fund that somehow. And also for inventory to make more product to sell. So manufacturers are closely tied with asset-based lending. On a transaction-based lending, it's generally working a contractor on government contracts. And that can be anything from as small as a small business that is providing janitorial or custodial services for a local government office building. And sometimes on these construction, and that would be probably reoccurring and would be less onerous than, say, if you're working on a project like the State High-Speed Rail, where you're working for a prime contractor and it could take you a much longer period of time to get paid. So generally in working with the government and government contracts, it's generally on a transaction by transaction basis. So those are a couple of the benefits right there. Some more is it allows businesses to take on new opportunities, and that a term loan does not support. And a good example of that was the one I just provided, where you don't need all the money up front, but you might also have a new opportunity that pops up. Whereas, gee, I'm making this particular product, and now my customer wants this product, and I can adapt quickly and go into that new opportunity or that new sales approach. With a term loan, we mentioned the one sum of money and you again accruing interest. With a revolving line of credit, the borrower only needs money as needed and pays interest on the time that the funds are being used. There are really specific needs for businesses on if they need really a term loan or a line of credit, and really differentiating between the two is important. But really, nobody likes to pay interest on money that really isn't being used at that time. Also, the Working Capital Pilot, it's a bad acronym. Great loan program, SBA. Got to work on that acronym. But the WCP may be used to provide a temporary advance against certain state and tax rebates, in addition to other uses. So that's one particular program that it can be used. Here's kind of a roadmap that they have of the transaction-based. And let's just say you have an order, you have a particular order, and this could be a business that is as small as doing Christmas or holiday sales in the wintertime. So you have a particular order that you need to do. You need to ramp up in the fall and get your inventory in, even if you're purchasing it from the manufacturer and then reselling it to a retailer. And oftentimes in a retail environment, you need to get that done early. So that is a small situation to where this particular credit line works really well as well. So you get it in the form of inventory. If you're in the manufacturing process, it goes to finished goods, of which then you invoice the payment, and then you receive payment and pay down. But that could all happen over a term of several months. And really the key here is being able to have the money in order to either produce or buy inventory, and then to either turn it into a finished good or sell it to a retailer, and being able to invoice for payment under your terms, which let's say are net 30, so there's another 30 days, and then paying down that particular amount once you receive it. The important thing and the biggest fault of those that get credit lines is they end up turning them into term loans. And that is not what they're designed to be. They're designed to really be used for when your business activity spikes, or you need to spike it and you need to throw money that you don't have at it right now. And then when that money comes back in the form of sales, it needs to be paid down. Oftentimes, these lines need to be paid off at least 1 month out of the year in order to continue to revolve. And then it can go on to the next year and the next year and the next year, subject to other other conditions and other things happening with that particular loan. So a lot of people really want to know what are some of the eligible uses of these proceeds? And again, working capital is just defined as, that capital that works in your business at all times. It works to pay your employees. It works to actually, buy materials. It works to pay your regular fixed cost each month, your rent and other things. And also your variable cost, as your variable cost will increase as either production ramps up or sales increase. So your sales increasing, obviously that is going to create a need, but also it could support a project or a specific transaction. If you have kind of a large sale that is untypical and something new prior to shipping actually those goods. Really, the government contracts really are a good one here, and it's really something that anybody who does business with the government, it's really one of the first things that we recommend is making sure that they have the funding to supply that particular contract. And don't rely on your own cash flow at all times. It's good to have a secondary or backup payment way for when you might get hung up on a particular issue. And, I've seen particular issues on government contracts go to litigation between a contractor and a prime contractor. And really, you're the one that's on the hook because you're provided that, even if you have a good case and feel that restitution will be coming. So some of the other things that are good eligible uses: post-shipment accounts, receivable financing, performance standby letters of credit, oftentimes for short-term projects. A lot of people who might want to get into exporting, for example. This is an excellent program and actually came out of some of the work being done with export financing. So also, there are guidelines, and is a guide that tells you all of the uses that can be used. Debt refinancing can be an eligible use, but it's really something you need to look into as far as if this use really works for you. Okay, so again, some of the examples of successful lines of credit. You'll see that there are seasonal businesses. A good example of this might be a lodge up in, let's say up in Mono County. So you have a lodge that is a seasonable business. Maybe you have 2 seasons, like many of our people do in Mammoth Lakes and maybe the Bishop community as well in Inyo County. So you have a seasonal business, and so what a line of credit can do is carry your particular business during the part where you're not generating revenues. And that can be, say, like a lodge. Maybe you have a lodge and it's in an area that is impacted by the mountain pass closures, for example. And you're only open 5 months a year in the summertime. So a line of credit is perfect to carry that business until you can open up and generate the revenues to pay off that line of credit. So seasonal businesses seasonal businesses we see a lot in agriculture. I mean, it's based on if you sell an agricultural commodity or a product, of when you need to buy larger amounts of product when it's available and turn that into maybe inventory or a finished good product, maybe a value-added agricultural product, and then sell that particular product during the year. The wine business is kind of that way. Whereas, they work a long time during the year on growing the grapes and incurring the cost. And then the grapes are either purchased or estate grown by themselves and turned into a finished good product. You also have expanding businesses. So expanding businesses of any kind, it can be a construction business. It could be my favorite, fence construction business, for example. And that particular fence construction business has a contract with a corporate vendor coming up and actually needs to pre-purchase the materials, buy it, and go. So that is more of a transactional basis, a transactional account that we talked about earlier. But other expanding businesses that are just seeing increasing sales, a line of credit that can actually build that and build that up we need to look at potentially it could be permanent based financing or a term loan, but a lot of expanding businesses can really use a line of credit, and it's the optimum way of funding their particular business. If a business has unusual cash flows, and by unusual, it's not really driven in this example by season or the fact that they're expanding, but maybe your cash flows are expending for a different purpose. Maybe you have a business to where you have a large contract that comes up with someone, and then it kind of is another gap of time before another larger contract comes up. And these really help smooth out the cash flow balances. And again, a lot of these cash flows and a lot of these profitabilities by using a line of credit are kind of determined by your profit margin. You have to actually factor in to your profit margin the cost of this capital and look at this cost of capital and actually factor it into your selling price if you're going to have to incur more expenses in actually carrying larger amounts of receivables, inventory, and other product. Purchase order driven businesses. So maybe again, it's a larger kind of unusual cash flow, whereas you have something that is based on a purchase order and actually comes to you. And then it is something that you need to actually either produce or maybe time in installation. It can be something that is added for value, for construction or other means. A lot of different examples we could use here. But if you have a purchase order driven particular business, then that is one that actually would be a successful use of a line of credit. And we had our earlier examples of manufacturing businesses, even small manufacturing business, and we had government sales and also seasonal type materials and seasonal type products that are sold on a seasonal basis. I don't know, too many people, I guess they do, that actually install sod in the wintertime, for example. Maybe that's not the best example, but it really goes to show that there are plenty of examples out there of people who have slow and busy times. And during those slow period of times is when a credit line can really benefit you. So if you have a credit line question, go to our Q&A and put that in there. We will be looking for questions on that. While you load up my questions and answers, and also we'll go through the chat in a few minutes, let me just show you a few other resources that are available and that are timely with the SBDC. And one of them is individuals who might want to start a home daycare business. A dynamic business startup class is beginning. It's online. It begins on September the 4th. $1,000 potential startup grants and classes in English and Spanish. Our partner Nurture is actually conducting the training. A lot of good consulting going on through Nurture and SBDC. Really a great opportunity for those to really get into a particular industry that is really needing people to get into this industry. There is a demand for home childcare. There's a demand here in Kern County and other places. We are kind of on a childcare island still. And they really help you with one really difficult part, and that is actually going through the licensing process with the state of California. I know, you're not surprised, but they're that good. They can actually help you with that particular problem and that particular issue. Here at the SBDC, membership with the SBDC is simply signing up as a client and speaking to one of our advisors on any particular business issue, including the ones that you heard today. Really, we consider ourselves to be a specialist in accessing capital. If a credit line isn't for you, maybe you're looking at a shorter or a smaller actual loan between 25,000 and under. We've had a lot of great resources and a lot of great programs in 2024, and there's a lot of lenders that are working in basically community development financial institutions or CDFIs that have really unique programs that really help a lot of people seeking smaller amounts of funding. But we also have the big stuff too. So you can speak to an SBDC advisor. It really opens the door for a lot of other tools that really can help you and your particular business thrive. We have market research information through the National Information Clearinghouse, that being SBDC Net. We have Vertical IQ, which is a great resource that we're starting to use now. Our clients are raving about the information that we can help you get it for your particular business. We've talked about the AI enhanced live plan, the intuitive live planning tool and process that we have. And live plan is a process to where you can work on a particular business plan for a specific period of time. It doesn't cost you anything. While you are on there, our Central California SBDC region has a large number of seats that we can actually onboard our clients onto those particular seats for a specific amount of time to work on your business plan. It's not indefinite, it's not forever, but it's a great opportunity to have a platform where your business plan lives, to where you can work on it and you can work with an advisor on really perfecting that particular business plan. You know, our YouTube channel, we talk about a lot. I mentioned it even earlier, CSUB SBDC. About 300 of our webinars, 250, I can't recall, I've been on there. The webinars were started in January of 2013. And boy, they looked a little different back then, I'll tell you that. Our transition plan, our leadership, the Morgan Clayton Family Leadership Transition Plan is a fantastic document that we can share with you on how one family went through a leadership transition from one generation to the next. Really hard to find stuff like this, and to really see a successful application and to really see the information shared is fantastic. Our insurance field book is out there. We've talked about that on a past webinar, and some of the things that are really happening in insurance now really bring that into actually a great opportunity now to really look at insurance and understand how you can actually manage your risk for your small business. Our capital assessment form goes through asking you a lot of tough questions on capital, but really it's designed to get you the best possible accessing capital out there. And of course, our resident economist, Dr. Mark Evans, will be returning soon. So one thing, save the date, October 19, 2024, we have a major California State University Bakersfield Small Business Conference coming up. And it is coming to Bakersfield on Saturday, October 19th. I can tell you we're going to have a full-fledged Capital Summit with over 50 lending programs that are discussed that day. We're going to discuss innovation, technology. We're going to have an accelerator through our Center for Entrepreneurship and our Center for Entrepreneurship and Innovation, and many other colleges within CSU Bakersfield, and what they're doing from an entrepreneurial standpoint will be there as well. So great conference coming up. Save that date. You can contact us, go to our website and sign up for SBDC services. Again, thanks to our great sponsors. And now let's jump into the questions and look at some of the questions that you have for us today. Okay, the first question is, what is the process to apply for this loan? And what is the way to be eligible for these options to apply for these particular loans? So on that, I will say, I believe you're talking about the line of credit program, and I'm assuming you are, because we didn't really get into anything else. So brilliant deduction there. So the process is finding a lender that's going to work with this program. This program has only been out about a month. We are working with and hope to, by our next webinar date in 2 weeks, have a small list of banks that are actually working in this particular program. It's a pilot program, so they have to go through and look at all the benefits to them. And we expect to have a short list of banks that are going to, and other SBA 7A lenders. If they're an SBA 7A preferred lender, they can actually jump right into this program by signing a couple documents. So this is a particular program that has great onboarding flexibility for lenders that are already SBA lenders, and those that are already either preferred lenders or have some other status with SBA at this time. This is something where also it's great if you want to talk to an SBDC advisor and work with them as well. So hopefully that answered that particular question. As far as a specific lender to mention today, I'll have one in, I think, 2 weeks or more. What if your AR, what if your accounts receivable comes from professional services? Well, I think it's just documenting that the professional services are there. And I think that, that is something that might vary by potential lender, but I don't see a particular problem. Um, so professional services, so let's say you are providing, let's say small business consulting or accounting services, maybe accounting services. So if you are providing accounting services and you have terms where you're not getting paid for 30 or 45 days, maybe it's under a government contract where you're providing advising or consulting services to a potential government contract and you're not getting paid for 45 or 60 days, then I don't see any issue of that. I think it just needs to differentiate between the fact that your business has sales on credit and the sales on credit are taking longer to collect, which is really a term loan, rather than those that revolve on a daily or really more current basis. What if you do not work with the government and are no longer eligible? Well, I think that would probably happen during the review on an annual basis if it's revolving. So let's say you started with a government contract, it's going to still come down to if you have a need for a credit line, and that's really going to be the burning question. So if you have been doing some government procurement work and you have been working on a contract that is closing, then, I think basically since this is a revolving line of credit, meaning that it revolves from year to year, and by usually paying a fee and going through a review, then it can be renewed for the second year. The key is that do you have sales that are causing you longer term pain? So do you have sales that are taking you 30 to 60 to 90 to 120 days to collect? And that is generally what you want to see with a revolving line of credit. Or do you have a business of a nature that is seasonable or is expanding to where you might have higher sales later, and when those sales come in, you pay off the amount that it cost you to actually incur those sales. So I would say it's going to be basically a case-by-case basis. Well, you're welcome. You're welcome, and do talk to an advisor. And you can do that by going to our website that I showed earlier, csubsbdc.com. Hit the Get Started button. 5-minute little intake process, comes to our office, and we'll figure out the best advisor for your particular issue. Okay, so a little clarification. I do not work with the government at all. Am I still eligible? Yes. You don't have to either work with the government or for the government or anything else. If you're eligible, it's going to come down again to that particular need. And if you have a need for a line of credit product, and that line of credit product, I think we've talked about quite a bit, but reach out to an advisor and talk out and discuss with them the potential and get your exact situation, and we can get it answered spot on then. Okay, I don't see any other questions. Let's jump into our chat. Well, good afternoon to all of you. It's good to be in here and see the wonderful greetings today. So jumping past that, a little information on what we talked about on the September 12th event at the Kern River Valley Senior Center. The great Aaron Falk is in the chat, and he's talking about the Kern Community Foundation. Thank you for bringing that up, Aaron. Kern Community Foundation that we talked about in our webinar 2 weeks ago, which is up on our YouTube channel right now to get more information. But they continue to grant out dollars to nonprofit organizations and provide relief and recovery. You'll see the website listed for the Kern Foundation.org/Borel, B-O-R-E-L. So Maureen has added also the AltaOne credit union information if you are there. Another question in the chat is we serve as a general contractor, exploring opportunities to offer aid to individuals impacted by these fires, deaths, devastation. Yes, it is unpleasant, but it is imperative for families to regain ownership of their homes. I'm convinced we can offer that support. So, Mayor Lupe, thank you for reaching out, and maybe we can talk offline and figure out how you can better access and how you can provide service to the community. Maureen has our SBDC YouTube, which 2 weeks ago had Aaron Falk of the Kern Community Foundation and also Jim Damian from the County of Kern talking about some other resources that were available. The Working Capital Pilot Program, if you really get into, they have a guide which contains 36 pages of detailed information. The Nurture no-cost training program is in the chat. There's the phone number to talk to a Nurture coach and learn more if you want to start a home childcare business, 833-241-3994. SBDC related consulting. You're welcome, everyone. We appreciate that so much. How does one participate as a vendor at Cal State Bakersfield Small Business Conference? Well, we're still getting to that point about potentially having vendors. If you want to, reach out to me directly. And when we have more than saving the date, we'll be gladly reach out to you. So that is, can be accessed via my email, which I think many of you have, but I just put it into the chat at kbearden@csup.edu. I'm hearing bells in my background. That means that it's 1 o'clock and this webinar is over. Seeing nothing else to talk on this topic, there's credit lines out there, there's capital, there's a lot of ways that we can help you. Thank you for attending today's webinar. You know, I'd say for my special guest today, but I didn't have one. But so for our producer, Maureen Busher-Dang, I'm Kelly Bearden. We will see you next time. Everybody have a great and profitable day. Goodbye, everybody.